welcome everyone. Good afternoon. My name is Greg Klein. I'm joined by my colleague Dan O'Brien. And just a heads up before we get started, and again, this is being recorded, so I will follow up and let you know when the recording is available in case you want to share it with any of your coworkers, employees, or if you can't finish the entire webinar, need to come back and watch it later. It'll be, recording will be available. And since it's being recorded, the chat feature is likely the best way to submit those questions. You can always take yourself off mute. We'll have plenty of time for Q&A at the end. So we welcome any questions. If you want to unmute yourself in the meantime, just use the chat feature. And you see the title for the presentation this afternoon is talking about life insurance and your retirement. You have my name, Dan's name, and our direct email addresses on this title slide. And at the end of the presentation, you'll get all of our contact information as a team, but feel free to reach out to either me or Dan directly, or it's pretty easy to schedule time with us as a team, and you'll get that information at the end of our presentation. So without further ado, we'll get started. We'll take a look at the agenda for roughly the next 30 minutes. This morning's session took us about 30 minutes. So like I said, we'll have plenty of time for Q&A. We're always available after this webinar. So if something comes up, you don't feel comfortable asking the question on the webinar, or you just didn't think of it until you're a little bit more relaxed this evening at home, follow up with us. We're always here for you. So it's not just now, but we're here to help you with your retirement planning at any time. And insurance plays a big part of that. So our agenda for today is talking about life insurance, the different types of life insurance, why you need life insurance, how much do you need, how it fits into your overall retirement plan. And then we'll leave you with some takeaways, some things that we've seen that you can look out for, so those pitfalls to avoid. And so our first segment is to go over the different types of life insurance. We'll discuss the characteristics of each, some advantages, disadvantages, and then I believe Dan's going to walk us through that section. So I'll turn it over to you, Dan, to talk about this.
Great. Thanks, Greg. And again, welcome you guys. It's great to spend a few minutes with you today. Life insurance, not always the most popular thing to talk about, but certainly a very, very important piece of not only your retirement, but your life plan. So thanks for being here today. And this actually will probably go by pretty quickly today. So we'll talk about two different types of life insurance today. We'll talk about term life, and then we'll also talk about permanent life insurance. And within permanent life insurance, there are two types that we'll talk about there. You maybe have heard of them: whole life and universal or variable life. So those are the ones that we'll talk about today, and we'll start today. Greg, if you want to slip to the slide on term life insurance, we'll start there. Great. Thanks. For term insurance, you guys. What term insurance is term insurance is a type of insurance policy that provides coverage for a certain period of time or term of years. For those of you, maybe some of you already have some of it. Most often those terms are obviously in years. It's 10 years, 20 years, 15 years, 30 years. You'll hear it in those sort of increments. Term insurance pays out only if something unfortunate happens to the person that's the policy holder. And it has to be obviously within that time that the policy is enforced or that the policy is active. Then there would be a payout or a benefit to the beneficiaries. I compare it, you guys, to like having car insurance. You pay for car insurance, you hope that you don't need it. But if you do need it, if you do have an accident, there's something there to repair your car or to take care of a new car or a different car, whatever it might be. So think of it that way with term insurance. It's there, you pay for it if you need it. If you don't need it, you paid that premium, and what you've got is you got peace of mind from that premium. Okay. Term insurance, without question, is the least expensive of the ones that we'll talk about today between whole or variable insurance. Typically, you pay a monthly premium. Those premiums, you guys, are usually flat or they're fixed, and the cost is based on your age and your health. You can extend or renew, but your monthly premiums, if you extend or renew, your monthly premiums will most likely go up. I'll give you guys a real life example. I had a 20-year term that went out a couple of years ago, and my premium went up by quite a bit because I'm now 20 years older. I ended up getting another 10-year term. If I would have been smart when I was younger, I probably would have went after the 30-year term and been good to go, but I didn't, and realized that I still need to have that insurance to take care of my family if something were to happen. So term insurance is also, it's most used for debt protection for your families to cover things like mortgages, lost income, debt, college funding, credit card debt. Those types of things are what it's used for. And without question, it's the most popular type of life insurance. And Greg will speak a little bit more to that when he gets going on some of his slides in a few seconds. So that's term insurance. The next one that I'll talk about is whole life. Greg, thanks for moving that slide along. Whole life is insurance that will last for the policy holder's whole life. I think that's why it's called that way. Again, different than term, because term is just for a specific amount of time, whereas whole life, there's going to be a payout to a beneficiary for sure, as long as your premiums have been paid. Premiums are going to be higher than what term insurance is, but a portion of the premium will pay for the insurance, and there'll be another portion of the premium that will go into a savings account where cash value can build up. And again, these premiums are similar to whole life in that it's a fixed amount that you'll pay. And there's, as I said, a cash value that will build up in that account. And the insurance company will pay a dividend or interest on the amount of money that is in that account. And as a policyholder, you can withdraw on that or you can borrow against it. It'll be more expensive than term because of that cash buildup situation. So that's whole life. And if you want to move on to the next slide, thanks, Greg. The next slide is other type of insurance we'll talk about, you guys, is universal or variable life. Universal or variable life insurance is very similar to whole life. It's permanent life insurance, which again means it lasts your entire lifetime. There for sure will be a payout to the beneficiary. And it also has a cash or savings and cash value to it. The difference between universal variable life and whole life is that universal or variable life is tied to an index like the Dow or the S&P or the NASDAQ, and your cash value can go up or it can go down. With whole life, as I talked about earlier, that's going to be a fixed amount. It may be an interest rate or dividend, whereas this one will be tied to basically how the stock market might be doing or whatever index it's tied to. So there's a bit more upside, but there also could be a downside, just similar to what your 401 or your 403B might do as well. All right. Again, a reminder, whole life dividend or interest is set by the insurance company and is fixed at their discretion. And term, again, of course, has no cash value to it at all. The universal or variable life, like the whole life, you guys will be more expensive than what the term life will be. Okay. So with that, those are the three types of insurance that we'll talk about. And Greg, I'll toss it back over to you. And you can talk about why we would need life insurance and why it's so important.
Perfect. Yep. Now, so we've discussed, what life insurance is. Dan walked us through those different types that are available, how they work. So now we'll take a moment and we'll discuss how that life insurance fits into your planning approach for retirement. So let's take a look at why you need life insurance. And we'll bring up this pyramid of needs. So as you look at this pyramid, it shows how you're protecting your essential needs down at the base of that pyramid. The foundation of your financial planning is for, like as Dan mentioned, unexpected passing of you or a loved one. You have enough to cover those essential needs. That protection is at the heart of what life insurance is. And so you'll see that that's highlighted on our pyramid of needs, because that's where we're going to focus most of our material in this presentation. There are, of course, circumstances higher up on that pyramid of needs, where life insurance can play a role in accumulating more income to cover some of those discretionary needs in retirement. So not just your essential needs, but more of that savings component that Dan was talking about. If the life insurance policy, if it's funded properly, it can build up that cash value and provide for those discretionary needs in your retirement. And then finally, at the pointy end of the pyramid, up at the top, you see that life insurance can even play a role in enhancing your legacy, leaving money to future generations or your family heirs. But as we'll walk through this information, we're going to stick really to the base of the pyramid, that foundation, and the protection aspect, the essential needs, because honestly, that's where 90+% of us are going to find ourselves using life insurance with our retirement planning. So that's a little bit about why we need life insurance. What are those essential needs? Well, most of us are going to want to cover the debts that we have, replace our income. We wouldn't need life insurance now if we had a big enough nest egg and the savings and assets built up to the point where we could self-insure. And by self-insure, I mean, if you passed away, would your dependents be able to pay off all the debt? Would they be able to maintain their same standard of living just by drawing from your assets and the investments that you have? And if that's the case, you might not need to buy life insurance. You might be able to self-insure. But for, as I mentioned, 90+% of us, I'm sure we're not able to do that. So in the absence of that ability to self-insure with our nest egg, our savings, we need to make sure that we have enough coverage for those essential needs. And life insurance can be a very inexpensive way to fit that into our retirement plan so that we can have this protection, but still have enough money to set aside a little bit for emergencies, take full advantage of our employer-sponsored retirement plan, our 401k, 403b, work on paying off our mortgage and our debt so that eventually we reach that point where, yeah, we might be able to self-insure and we might not need that life insurance any longer. But if your assets and your investments, if they cannot pay off your outstanding debts, replace your income for the remainder of the time that you would be expected to provide for your loved ones and your family, then you're going to need some life insurance to cover that liability in the interim. And so you see there on the slide, we talk about debts, we talk about replacing income. Dan's going to walk us through in a few moments, in some more detail, what other things we might want to consider. But take a moment and just think about, that scenario. If you were to suddenly pass away, or your spouse were suddenly to pass away, would your family or your dependents, would they have what they need? And if you think about that and your answer is not a definite yes, then life insurance is a way that you can buy that security in the interim while you have long enough to build up your net worth so that you can self-insure. So you pay for that security, for that life insurance, so that if the worst case scenario happens and you're no longer with us, that the debts can be paid off and you can provide for your family. And I just use an example. Let's say somebody that's joining us today is maybe in their 30s. They're kind of, they're moving along in their career. They're maybe starting a family. They're putting down some roots. Maybe they purchase a home. They have student loans that they're working on paying off. And after they've gone through the exercise that we'll go through in just a moment with Dan, maybe they total everything up and they realize they need hundreds of thousands of dollars to pay off their debts and be able to provide for their family for as long as they would be expected to provide during their working career. But remember, this person that's joining our webinar today, they're only in their 30s. So how is someone in their 30s going to have built up that level of savings or that nest egg at this point? No one would ever expect you to have accumulated that much so early in life. So that's where we talk about fitting life insurance into your plan to provide you that peace of mind. So you're buying some security, some peace of mind, while you can work on building up your nest egg and your assets so that you're fine and you're able to be self-insured. That's why we look at life insurance and having that in your overall retirement plan. And then the next segment, or the next question that you're probably asking yourself is, all right, I understand I need life insurance. Maybe I have a little, but how much coverage do I actually need? And we're talking again about the base of the pyramid, so those essential needs. And Dan will walk us through the example, but before we get to that, we just want to set some priorities and talk a little bit about how you would prioritize these things in your budget. So first, let's look at our list of priorities that we put together. We work mainly with retirement plans, 401ks, 403bs, and a lot of these plans that we work with are very generous, and your employers offer a matching contribution. So you'll see that in our list of priorities, we'll have that over on the left as number one. We know that everybody is, pulled a million different ways. Your budget's stretched very thin. You don't have a lot of wiggle room for your hard-earned paycheck. So we're trying to help you set some priorities. And what we've done with the priorities, you'll see 401k, 403b, if it offers a match, that's going to be first, because we're looking at where can you get a guaranteed rate of return, and then what is the probability that you're going to fall in this situation. So first we have 401k, 403b. If your employer offers a match, that's a guaranteed return. So with 100% certainty, you can get this return on your money before it's even invested by taking advantage and getting as much of the 401k or 403b match as you possibly can. So that's got to be number one on your priority list. It's a super important piece of solidifying your future, your family's future. Remember, with your 401k, 403b, just like with an insurance policy, you have a beneficiary or beneficiaries. So you want to get that guaranteed return in your plan, because again, if you were to pass, that money is still going to go to your loved ones. So you want to get that guaranteed return first in your 401k, 403b. Next, then in the middle, we put emergency savings, and we're talking about at least a little bit set aside for those emergencies. It might be a few $100, maybe a few thousand. Maybe you're at the point where you've built up a few months worth of expenses in your emergency fund. And the reason why we put this after getting the match in your 401k, 403b, because that matches the guaranteed return, but there's also a pretty high probability that you're going to have some sort of little emergency. And you want that cushion with a small emergency fund. Yeah, you're not going to make a ton of money on just your savings account with your emergency fund, but that's not the idea. It's there to have that little bit of a cushion, so if something happens to you, then you're not strapping yourself or your loved ones with credit card debt. So a little bit of emergency savings is very likely that emergency will come about after you're taking full advantage of the 401k, 403b match. Have a little bit of emergency savings, and then we're looking at that additional protection, providing additional security with something like life insurance. And so Dan's going to walk us through just a brief exercise, a little worksheet, look at an example of how much you need to think about in terms of that life insurance coverage.
Great, thanks, Greg. And I would go back to the middle one that Greg was talking about. I'm going to get off track just for a second, you guys. I had to chuckle a little bit, and it's not even funny, but when Greg was talking about the emergency fund, it seems like every house I've ever bought, and I've had 4 different houses in my wife and I's lifetime, and every single house we've purchased, within the first year, 1 or 2 appliances always seem to go out, whether it's a washer or a dryer or a refrigerator. And I would bet that there's some people that are on this webinar that have had the same thing happen to them. So that emergency fund is pretty important, not to mention our car repairs and that sort of stuff. But I digress. Let's take a look at the protection worksheet, calculating your needs. The first thing that I would tell you guys is that every person's needs are different. There is no one size fits all, but by asking certain questions, we think that we can find a range that will fit your needs. So let's take a quick look at this simple financial needs worksheet that I put out. I was just making up numbers here in terms of a mortgage balance. If you can add your own in there, your mortgage balance. In this particular scenario, the mortgage balance is $200,000. For me, as my wife and I talked about our life insurance needs, one of the things that was important to me was that my wife and kids could stay in the house that they were in if something happened to me. So I made sure that we always had enough life insurance to pay off our mortgage balance and outstanding debt. I didn't want to leave my wife with a bunch of different debts. you guys, I put 50,000 in there, and some of the debts that you'd be thinking about: student loans, car loans, credit card debt, furniture payments, whatever it is that you might have. I did some research on it. The average American household has outstanding debt of $90,000, which I thought was high. But so if you guys are coming in under 90,000, you might be okay. That's a good thing right there. So I had 50,000 in for that. College education, I don't know how that fits in your family's plan. In my family's plan growing up, my brothers and sisters, I came from a family, there were 9 of us, and my parents couldn't afford to help the first one go to college, and I was second to last. So they said, hey, sorry, we couldn't help the first one, so you're on your own for college. So my parents didn't need to have, or didn't save money for me to go to college. In my family today, I have 2 boys that just finished college and a daughter that went through as well. And the situation I had for them was that I was able to afford to help with part of their education. So I did that. I saved for it and made sure that there would be some money there if something were to happen to me that could cover some of their education. My brother is in a little different situation. He can afford to handle all of his kids' education funding, so he doesn't have any that he looks at from life insurance standpoint. So there's different ways that you guys can look at that one and handle that one there. End of life experiences, that would be your funeral experience or possibly some medical expenses. I put that in at about $15,000. The average is going to be somewhere between 12 and 15. But with medical expenses, you guys know how that piece can be. I added some additional for that. Income replacement is the absolute wild card. Everybody's situation there is a little different. I can give you an example of what my household is like. My wife is a 4th grade teacher. If something were to happen to me, would we need to replace some of my income or all of my income in order for her and my family to live the way they're living now? Probably. So maybe not all of it, but I've taken and factored in a number that I think is appropriate for her, because the house will be paid for and there is some income replacement in there. So if you take a look at life insurance needed, if you add those numbers up without any income replacement, I've figured this person will need about $465,000 of life insurance to cover those basic simple needs, plus any income that they would want to replace moving forward. And again, all of these things are certainly needs are different for everybody. So that would be a quick calculation, Greg, that we could throw up there. And if anybody has any questions regarding that, they certainly can put it in the chat, or they can certainly get a hold of myself or get a hold of Greg, and I can run through a financial needs or protection worksheet with you as well.
Perfect. Thanks, Dan. Yep, that everybody's, like Dan said, everybody's situation is going to be a little bit different. So if you want some individual attention and want to go through it with us individually, we welcome that, of course. And we'll finish up before we get to any Q&A. We'll just leave you with some of the takeaways or some caveats, pitfalls to avoid. We'll talk through a couple situations that we see pretty often when it comes to life insurance. So that's our last segment. And one of those pitfalls or common mistakes, if you want to put it that way, is to have too little life insurance coverage. I mean, we just saw in Dan's example about how those things add up. And, you might not have as much coverage as you really need when you start to think about all those things that you would need to cover if you were no longer with us. So, that might be because you just got life insurance to pick up those final funeral expenses. You never thought about some of those other points that we discussed today. Or maybe you took life insurance through work. It's part of your benefits package at work, so you get some inexpensive or maybe even free coverage, and you thought, well, I'm probably good with that. But those options are both fantastic. I mean, you want to take advantage of obviously cheap and easy options that you have through work. If you have a plan to pay for those funeral expenses, that's excellent as well. You want to have that's included in our financial needs worksheet that we go through. But just having that coverage and understanding that taking advantage of those plans like you have through work and likely not enough to provide for all the coverage that you need to pay off your mortgage, pay off your debts, replace your income, if you're looking at future college expenses for your children. So there is a big issue of too little coverage. And that kind of ties into the second mistake that we see, is that you don't have the right type of coverage. And so very frequently, as we've talked about for the last few minutes, about the amount of coverage that you need to cover all those needs, the cheapest option, that term life insurance, that might be the only solution that works for your budget. That might be the best solution. But we'll also see that people sometimes have a hard time, wrapping their brain around the idea of, like Dan mentioned, just having life insurance kind of like car insurance, where you have that term policy and you're just paying for the straight life insurance, and you might not, and hopefully will never, get anything from that policy. You're just paying for that pure protection. And life insurance is like those other insurances. It's like car insurance, maybe a high deductible health insurance plan, disability insurance. You hope to never have to use it, but you want that security there for you and your loved ones. Term insurance works the exact same way. Yeah, you might not get something for the premium that you pay, but hopefully not. That means you live a long life. But what happens with people getting not having the right type of coverage is, again, they have a hard time with that term life insurance, that they're just simply paying for that insurance protection. And so they'll look at a cash value type of life insurance policy. Well, as Dan taught us, those cash value policies are more expensive. So if they're looking at that type of policy, then for what they're able to pay for life insurance in their monthly budget, now they're reducing their coverage. They might not be able to get up to the coverage level that they truly need. If you're very well off financially, so we're talking about you're in a situation where you're not only getting the most out of your 401k, 403b match, but you're maxing out your retirement plan contributions, up to the IRS limits. Maybe you're even saving beyond that in an individual retirement account. You got cash in case of emergency. Well, then you might, the right type of coverage for you might be something where you have a cash value type of life insurance, and you can save up that cash value for some of those discretionary needs in retirement. But again, for most of us, probably that pure coverage just to cover our essential needs, make sure we have enough coverage, the term life insurance is probably going to be the cheapest and right option. So having the right level of coverage, and then that ties into having the right type of coverage. First, your level. First, you want to make sure all your needs are met, and then figure out, what you can afford, what better fits into your overall financial plan. But consider that coverage level, and then consider which option is right for you. We learned in the presentation about these different types of life insurance. That term is just that pure protection, but it's going to be cheap, low cost, just pure insurance. Whole life insurance, or the universal types of policies, they're going to have that cash value portion. Maybe building up that cash value or having a flexible premium, like with a universal life insurance policy, is attractive. But if you can't afford that policy at the coverage level you need, then it sort of defeats the purpose. We want to make sure, first of all, that you have the coverage that you need to provide for everything that your loved ones are going to need if you pass away. And if you'd like to find out more about that, we're always here to help you. That's part of the services that we provide, being the advisor on your retirement plan. You can always reach out to us for any of these financial questions. At the beginning of the presentation, you had our direct emails, but beyond just emailing us directly, for you, probably the most convenient way to schedule some time with us is at our Calendly link. So you can pull out your phone and scan that QR code. That'll get you to our scheduling page, or you can go to that website, the Calendly website, and that way you can put time on our calendars. We added an option in there just for life insurance. So, following this webinar, if you just want to talk about life insurance, there's an option at our scheduling page to let us know that that's what you want to discuss. This webinar is recorded, so we'll post it on our website. We'll send you out a link. You can always call us. You can text. There's lots of ways to get a hold of us. We're always here to help you, not just during these 30 minutes or so, but we're always here to help. And so we'll open up to questions in just a minute. I just wanted to give you an opportunity, Dan. Anything I missed? Anything else you wanted to mention before we get to Q&A?
No, I think you did a great job. Awesome.
Okay. So let's take a look. I don't have anything queued up in chat. You can type away if you want to submit a question via the chat. If you do, you can unmute yourself. If you want to unmute yourself and ask a question too. I know personal finance, and even more so perhaps than retirement, things like life insurance. Sometimes you prefer to discuss that just one-on-one. So that's why we have our easy scheduling page. So that's okay if you want to schedule time with us later to talk about this, but we do want to give you an opportunity if you have questions. I don't see any still in chat. Anybody want to unmute themselves and ask anything? All right, Dan, I don't think we have any takers. So well, thank you for your time this afternoon. We appreciate you taking some time out of your day to join us. And scan the QR code, go to that link. Don't hesitate to reach out to us if you want to talk a little bit more about life insurance or your retirement plan. We're always here for you. So thanks a lot and enjoy the rest of your day. Take care.